Hey guys, thanks for checking out this weekly market update for FinPrep, looking at the week of September, ending September 18th, 2015. Pause the screen, read thoroughly. Information contained herein does not constitute investment advice, should not be used as the basis of investment decisions. In order to obtain investment advice, contact a registered investment advisor. FinPrep and its affiliated parties should not be held liable for any investment decisions you choose to make. Information contained herein is for, informational and educational purposes only. So, taking a look here at SPY, the week didn't disappoint with respect to being volatile as well as interesting, given the Fed minutes being released as well as option expiration. So we had price come in, bang on to previous price channel, what was support. So connecting the open here to the low here to the open here, what you have is price basically contained herein, right? So pretty descriptive of what had happened for approximately a month. Prior to the correction, where price then breaks out. So the principal and technical analysis, anything which was support, if violated, then becomes resistance, or is likely to, or is possible to. So, and that's what we saw. So bang on Thursday. Gosh darn it, where does it stop? Within 10 cents of pretty much this downtrend line extending back to July. So pretty fascinating stuff to see how, though the market doesn't travel in a straight line. Amazing that doing something as simple as drawing a straight line can actually help us identify in advance inflection points. Although regrettably, this trend line wasn't drawn last week. We were looking more at the 204, but within a dollar, that's better than throwing darts. So very interesting stuff. But price did end up stopping right here at this kind of very short term within this kind of figuring out what market trying to find a direction. Arguably the ascending wedge or symmetrical triangle more so in the S&P. But pinched between the two. So Monday's open should be interesting, and then the subsequent price action, needless to say, as far as determining do we retest, and do we retest potentially down in the 187 or the 204-ish, let's call it. We'll find out. Dow's more or less the same picture, except, however, the 200-day moving average does appear a bit more aggressively descending. That's to be expected given its kind of status so far. The Qs, so NASDAQ, basically what we have is people are looking at that for close on Friday and thinking, is it a breakdown out of the ascending wedge? Yes, that's possible. We wait for an answer, though, because we have this downward price channel, kind of like how we saw in the S&P, and we're within that. So even though we're breaking out of this kind of pattern post-correction, the pre-correction price channel still in effect, as it were, right? So you stopped exactly bang on right there, essentially, as well as the uptrend from 2012 and the 50 DMA. So just a confluence of technical factors, bang, price stops. Pretty interesting. What a coincidence. And we now see price here. So is it a breakdown, of this ascending wedge? In which case, missing the 20. If price pierces the 20, you would expect further downside, or is it simply going to consolidate within this pattern, this price channel, and then potentially move higher? Probably we'll find out this week. Trannies did manage to break out of the intermediate term resistance for a day, opened up the following day, Thursday, only to kind of get hit hard as well, and then Friday fell back within the pattern. So again, same idea of, does it retest sort of the trend line support down here, or drift up back to this 151.5. They'll all probably move in sync as far as the major indices, so just looking for direction in general. And then more or less within the biotechs, 360 did hold as intraday resistance, though closed above on Thursday and then popped back below on Friday. So again, we'll see what the heck happens next week as far as getting a better sense of direction, but clearly this is taking some time. It's been approximately, 4 weeks, I believe, since end of correction. Yeah, going on week 4 here. So flipping back to TLT, price did end up coming into trend support and rallying. So looking though ahead, the 250 and the 200-day moving averages coming in across with this resistance line, which kept prior attempts to rally, chopped up a bit here. But if this does hold, it's kind of, again, another area of you would expect some sort of a fight to be had here and a potential inflection point. I don't know that this is going to be a straight shot to the moon, in other words. So looking for kind of this 124, 125 area to be the zone of congestion for TLT potentially. Dollar index did have a bullish engulfing candle here on Friday, so as well as meeting the 250-day moving average, and then your kind of shorter term downtrend line here from August, so intra-month. So is the door open to then retest 25.20, or even trying to maybe in the next few weeks 25.75? Remains to be seen. So first stop though, assuming 20 is taken out, you could look through your 200 and your 50-day moving average kind of zone. So just kind of still consolidating within a relatively tight range. Silver's a bit more interesting. So if we're looking at the long-term chart of silver, 2011, basically you had your breakdown here. This was your secondary sell-off. Your primary sell-off was May. This would have been September. So 4 months out. And basically connecting here, this then became, you can argue, support here for a bounce, support here for a bounce, support here for a bounce, a tepid bounce here to break down, comes in here, more or less fails there, definitely fails there, false breakout here quite a few weeks, and then eventually rolls over to take out this low to make new lows, comes in here, we'll zoom in probably at this stage, I don't know that actually we hit it, it's alright. Yeah, so you get, no, that was it, right? You get about 5 days here, false breakout, and then fail. Come back in, 1 day break, false breakout, fail. Approximately 10 days or so here, a false breakout right above the trend line, fail. Come back into trend. You can argue another day, fail. Come back into trend. A few days popping up against it, pushing, and doesn't quite get there. Fails here, rallies, fails here. And here we are once again. So what happens, right? Clearly, we see what has been the precedent. Immediate feedback on Monday would be a gap down. Otherwise, if it can sustain a rally, potentially, targeting, chopping around in this range, probably cap below the 250 and the 200, as has been precedent for the past quite a few years, really. So, looking for an interesting week on silver. Oil, a bit slow on the punch there. Oil. Did hold the 20 as we discussed, managed to close above your bull flag, and then kind of had a reversal day on Thursday, and then sell off on Friday. So back in pattern. Question is, does the 20 hold? If not, does the two lines, but primarily this one has more touches as far as what could be constructed as a bull flag. Otherwise, price is within question. But pattern's still in effect. We'll see what happens, but nobody likes false breakouts. Or is it a premature? That's the thing, technical analysis. You don't know until after the fact, right? So is this false breakout only to reverse break pattern, or is it premature, gain some strength, and then rallies? So remains to be seen. But obviously decisions are made under the conditions of uncertainty. So interesting stuff. Looking at the proxy for China, XXI. Pull the weekly going back to 2008, pretty strong trend line here, right? So here's your initiation of the trend line, 2008, financial crisis, coming into 2010, 2011, pretty much every year, 2013, end of 2013, arguably almost 2014, and then, right, your touches, sell off, and then boom, you actually pierced above, that would have been August of 2014, price comes in, rallies, you have this monster of a rally here in the first quarter of this year, and then you're kind of beat down afterwards. So, but price is actually right along that trend line right now, right? So we've been here a few times, a lot of intervention, a lot of just kind of gappiness, craziness. So even though it's resting here, it's far from a sure thing as to where it's going to end up. So do we get more choppiness, or is this a nice inflection point for a resumption of the rally? Hard to say, man. Really hard to say. And if this fails, basically looking for another retest of 31 or 30-ish. But yeah, pretty key pivotal point that may well end up impacting risk sentiment across the board with respect to other exchanges, including S&P, right, for the U.S. So I just want to trust very briefly here on junk bonds. So even though we did have this clustering we discussed a few videos ago, yep, did manage to get above the 20, but now failed and closed below. So question on junk bonds, another risk asset is, can it recapture, or do we drift back towards this downtrend line, which has been in effect since 2014 August? Yeah, and then tips. So another generally perceived to be risk-off asset, arguably, if you want to ascribe such meaning in nomenclature to asset classes. because stocks and bonds can both go up in a stock bull market, so things don't necessarily travel inversely. But so bonds in this case, here is your 2008 financial crisis rallies. Here's the perfect example. And then your taper tantrum, as it was beginning to be made known that QE would be ending, so massive sell-off. And then this line is held as touch point for rallies, 4 or 5 points here. And then now we just get all this choppy craziness here in 2015. But price, so having rallied past 2 days, is coming into that downtrend that we've had since April. And then some price support, right? So whereas price bounced off here, bounced off here, bounced off here, this could be, again, a pivotal area, only because you're coming into some declining MAs short term, and then your downtrend, as well as what had been kind of your base, right? Your base for kind of at least pops. So the question is, do tips turn down? If tips turn down, junk bonds turn down. In textbook land, this was kind of be risk off, and you would expect perhaps stocks to travel as well. Anything can happen, so an interesting week ahead. Looking forward to hearing some resolution. Market trying to find its direction, kind of stumbling and bumbling around here. Though turning back at key trend lines and holding some support, so we can make some sense out of it. But as far as what's going to happen on the open of each day, it's kind of roll the dice. So remains to be seen, but we look for general overall patterns, finding the medium-term levels again, looking for like 187 down here for a low target, and the 183 on that month chart we looked at last week for an upside case. Obviously looking at like your descending channel that we already saw meet resistance. Can it retest and try to take it out? If it can take it out, does it hit 204? And if it can hit 204, can it meet the upper limit of this previous price channel, like 205.50? So that's just kind of the range of possibilities on either side. So remains to be seen. And we'll get some better answers, but time and price does have to play itself out here over the next few weeks, months, and we'll see how it goes. So, but things can change quickly on a dime, and as we saw earlier in the year, complacency and slow price changes can often preclude much larger, more rapid adjustments as reality gets redefined for us. So we'll stay appraised of what is happening and what is possibly likely to happen. And looking forward to getting you guys next week. I'm going to bed.